Can we make new highs if tech doesn't resume its leadership role in anywhere close to the degree that it had?
As long as tech is a market perform, if tech actually declines, that's going to be hard for the rest of the S&P 500 to compensate. But what we've seen so far, including days like Nvidia and Tesla recently, is that that tech is actually holding its own, but other stocks are starting to show catalysts and signs of life.
Yeah. What about the broadening trade? I mean, look, you look at the Russell, your big call, of course. Week to date's down more than 1%. Really hasn't done much at all. I kept hearing, hey, you got to wait till the Fed cuts. Then you go into the Russell. I don't know. What do you think?
Well, Russell had a big week last week. It's some profit taking now, but I think that there's, this is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020, in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small caps.
And you're still not necessarily sticking with the 50% up for small caps, but you still think they could have a huge move because they tend to move quickly.
That's right. I think what investors have to remember is small caps have been out of favor a long time, and they are known for having explosive rallies that are not abnormal. So last year was a 27% rally over really 20 trading days. I think we could see something very big between now and year end. I was hoping it would be after the Fed started the rate easing cycle, but maybe it really has to happen after Election Day. But are the fundamentals getting stronger for small caps? Absolutely, because interest rates are falling, merger activity likely picks up, and the median PE of a Russell 2000 stock is 10 times, 10.7 times. I mean, that's not demanding, especially if we're trying to be sensitive to valuation.
Brace yourselves, folks. The bustling world of stocks is buzzing with an electrifying twist. Nvidia, helmed by the indomitable minds of Jensen Huang, finds itself once again at the center of a sensational story. In what can only be described as an unexpected roller coaster, Nvidia shares, which were poised for an all-time high, have begun a sudden descent. But hold on, this might not spell disaster. The faint echo of governmental regulations on AI chip sales looms, possibly casting shadows over Nvidia and its competitors. However, beneath this seeming adversity lies the resilient spirit of Huang, a man whose extraordinary journey from the tables of Denny's to the zenith of tech empires is both motivational and instructive. As whispers around these regulatory restrictions surface, one must wonder, is this merely a blip or a golden opportunity cloaked in temporary setback? Intriguingly, as Nvidia's shares quiver, savvy investors might just see gleaming prospects in the horizon. Could the multiplying headlines herald an unforeseen opening in the world of AI supremacy? Welcome back, everyone, to Investocracy.
How about these reports that the U.S. is looking at restricting some AI chips out of Nvidia and AMD to certain countries?
I have a thesis on this, all right? So they're thinking about restricting the ones to the Gulf. They sell almost none, but if you can get out of selling it to the Gulf at a low price and you put those things out in the market right now, Nvidia is actually going to profit from this. It's actually going to profit because the demand for their stuff is insane. And again, when you're listening to Adobe and you're listening to Shantanu Narayan, you know that you can't get this stuff done unless you have Nvidia.
What was your take on what Sanjay told you last night?
All right, well, Sanjay's basically, he does a lot of high bandwidth, which is memory, which is data center, but he's doing a lot of NAND, which is good. He's talking about a 2025 move that makes you really want to get invested in PCs, AI PC. He's also spending a fortune, and he's going to own. He's going to open a place in New York. He's got other plants around the country, but around the world. But I just think his business is booming. It is just booming, and I think that people bought it up 19%. It wasn't enough. This stock deserves to be higher, and like it's down 54 cents. So like, did that guy watch? What was he watching? Donald Duck? I mean, Scrooge McDuck? That was a.
In the ever-volatile realm of stock markets, resilience is often tested, and jokers say, investing is like Vegas. The odds usually favor the house. Yet those who dare to defy the odds often find that resilience, as Nvidia's CEO, Jensen Huang, suggests, is the secret ingredient. At the recent CEPR Economic Summit, Huang threw a curveball of wisdom: advocate low expectations to nurture resilience. His candid confession, One of my great advantages is that I have low expectations, might raise eyebrows. Yet it underscores a profound truth about overcoming adversity. Huang's saga is laden with the fiber of perseverance, echoing the indomitable spirit of rags to riches, trading the bustling tables of Denny's for the challenging terrains of tech innovation in Silicon Valley. Huang's journey stands testament to his claim. Greatness comes from character, sculpted not by intelligence alone, but by endurance. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Meantime, we do have some activity in tech. NASDAQ was down about 1% a moment ago. Shares of ASML dropping sharply on their guidance, and for that, we'll turn to Seema Modi. Hey, Seema.
Carl, this is the Dutch microchip equipment maker reporting earnings that came in better than expected, but its guide for 2025 is weaker than what Wall Street had anticipated. It expects 2025 total net sales to be between 30 to 35 billion euros. The Street was expecting around 35.8 billion. And we have comments here from their CEO. While there continues to be a strong development and upside potential in AI, other market segments, he says, are taking longer to recover. It now appears the recovery is more gradual than previously expected. ASML is a key supplier to Nvidia, Taiwan Semi. It makes a very specific microchip that many other companies cannot make. So this will be an interesting read here across the entire semiconductor sector as we watch names like Nvidia trade in record high territory. Guys?
Yeah, although not right now, Seema. Nvidia down 4%, AMD as well. Do you believe it is on this related to this news?
It may be. Expectations have been very high, David, going into earnings season. ASML today, and then we have Taiwan Semi, which reports in about 24 hours. And given the whole story around demand, those comments from Jensen Huang about insane demand for Blackwell, again, expectations have been high.
Yeah. Well, again, Nvidia and AMD both down. Of course, ASML a lot more than that. Seema, thank you. Seema Modi. Would point out as well, you know, when we came into the session this morning, Nvidia was creeping up in market cap towards Apple's 3.5 trillion, but that disparity has actually grown given Nvidia's 4% loss. Apple shares up some 2%, perhaps on some data from IDC we got this morning as well. You can take a look at Nvidia, but Apple shares benefiting from a nice move higher.
Fast forward to today. Nvidia's splash in the AI universe with its next-gen Blackwell AI chips has the market abuzz. Facing increased competition and threats of export restrictions, Nvidia has launched these chips with a resilient fervor that Huang champions. The stakes? High. Huang insists that the demand for their revolutionary chip technology is insane. And why wouldn't it be? The company has established a competitive moat with its CUDA software kit, driving AI evolution, one processing unit at a time. Amidst whispered threats and the tumult of stock fluctuations, several data points silently declare Nvidia's robust performance. Revenue jumps, strategic architectural prowess, and a river of orders for next-gen chips suggest not panic, but precision. The calculated dance of market savvy, Nvidia executes with grace. The secret sauce lies in the platform's ability to create a flywheel effect, where each chip generation fuels future innovation. As you sift through the mountain of data and those pulsating NASDAQ values, one tweet captures a unique sentiment. Watching Nvidia's stock is like watching the Tour de France. You never quite know when the next climb is coming. Indeed, this sentiment resonates as Nvidia navigates its current course, one marked by adaptability and a forward-thinking ethos. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Again, I've been sort of talking about this for a bit now, really since, June, July, which is I think NVIDIA is going to be strong through this year. But when you get into the first half of next year, my belief is unless you see Microsoft or Amazon or Google or some killer app that everybody needs to have show up that generates a ton of revenues, as well as the profit picture is starting to improve, I think you're going to get into the first 6 months of next year and you're going to go through an AI digestion phase. Now, by the way, for the next 6 quarters, consensus is that NVIDIA revenues grow 7 to 11%. But for the next 3 months, 6 months, do I think things are probably fine there? Absolutely. But, I think you've seen the front of you've seen the front of this AI trade with Microsoft, Google, and Amazon being already weak when they reported back their June quarters. Now you've seen the end of that, which is ASML on the other side, missed by 50% on the order books. And so I think that's what people need to keep in mind, because I'm sure as we go through this earnings season, NVIDIA is going to have another beat and raise quarter because they haven't been able to deliver the Blackwell chips that they wanted. So people are going to say, see, I told you the AI trade is fine. But don't forget, we already went through this with COVID, where NVIDIA's revenues were down over 20% year over year after all of these same customers digested their COVID spend. Then this thing called, generative AI came along, and revenues went from down over 20% to up 84% at the beginning of 2021. And so I think, getting the time frames confused, but it went up to over 80% during COVID, from down 20 before COVID. And I think you're going to see a same kind of digestion period as we get through to the other side of this.
Dan, I'm sorry, I was going to say real quick, for lay people, what is a warning sign when NVIDIA reports, if there's any? I would imagine it would come in the form of margins, potentially a deterioration in margins. What would you look for?
NVIDIA is going to be the last person to see this. And so for me, I try to look out to the front of the food chain. So I'm going to be you're going to see NVIDIA react when Google, Amazon, and Microsoft report. Microsoft in particular, to me, is very interesting because if you remember last quarter, they missed their Azure numbers. And by the way, that's where OpenAI feeds through the model for Microsoft. And so if there's another problem there, people are not going to like it. Amazon's the other one because they are the biggest of the hyperscalers. And so I'm going to be watching very closely what AWS has to say, because that's going to be the leading indicator of a problem. NVIDIA, much like after that digestion following the COVID buildup, they didn't see it, and people forget. They pre-announced negatively when they were digesting all that COVID buildup. That's, they're not going to see it because their customers on, the front of this, they just want to get as many chips as they can right now, given the Blackwell chips were already delayed.
So where does this leave us as NVIDIA's saga unfolds in the grand courts of Wall Street? For keen investors, the current market wobble could signal a strategic entry point. Why? Despite the temporary turbulence, NVIDIA's prowess in AI hardware remains unchallenged, underscored by its staggering market cap of $3.228 billion and a gross margin floating north of 75%. It's a juggernaut of innovation with stocks priced at $131.60, poised to conquer new avenues. Forecast reports suggest potential growth as NVIDIA continues to enhance its AI landscape with groundbreaking chip technology and robust architectural frameworks like CUDA. Moreover, Huang's staunch commitment to resilience within NVIDIA assures stakeholders that the company refuses to be a fleeting market flame. It's here to indelibly shape the future of technology. So, dear investors, will you heed the narrative woven by resilience and opportunity that Huang exemplifies? Will you explore this landscape of evolving tech potential? Engage with us. What's your take on this unfolding story? Is NVIDIA a fleeting comet or a celestial powerhouse charting long-term success? The stock market waits, watches, and wonders. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.